So this is the wrap-up for the show of Wednesday, August 10th. Markets are relatively calm. Summer slowdown. People watching the Olympics. The non-farm payrolls was great, and the big gain in jobs. Wages are also up, and it remains a win-win situation because the Fed is in no hurry to raise rates. Central bank support also comes from the Bank of England. The Bank of England currently, they fire a lot of ammunition, lower rates, more money printing. And also the mood is looking better with oil prices that they found some kind of a bottom, escaped the $40 level in WTI, and markets are positive in general. What we are seeing is a sell-off of the US dollar. Well, relative sell-off, okay, not huge. So euro dollar is in range. 111.15 to 111.60 is the current range. 112.40 and 110.50 are on the other side of this range. Pound dollar recovers from the lows. 129.50 is the low. 130.60 is the high. To watch out for further resistance, 132.50, further support, 128.40. Dollar yen, we had a disappointment from the government and the Bank of Japan, but then recovering on the NFP and now selling off on with the dollar sell-off. 101.50 is the current level, 100.70 support, and then 100 resistance at 103.40. Well, before that, 102.50. Dollar CAD, conflicting forces, job losses in Canada versus rising oil prices, currently in range 130.80, 131.40, 132.40, support 130 and 129.10. The Aussie dollar 77, moving up, risk off sentiment. The RBA cut rates last week, but they're not expected to cut rates again anytime soon. 77.40 is the next line of resistance. And 76.60 is support. Kiwi dollar, we had a special segment about the Kiwi dollar. Rate decision tonight, expected to cut rates. That's fully priced in, 25 basis points, but they might cut to 50 by 50 basis points or drop heavy hints of more cuts along the road, and this could hurt the Kiwi. Anyway, 72 at the moment, 71.60 to 72.60 is the current range. Let's talk about other events and about the Bank of England, NFP in this wrap-up. Well, in the wrap-up, let's talk about, mention the events for today. Jobs openings in the US should be okay, because for the month of June, which was good in the NFP, but shouldn't move markets too much. Crude oil inventories has a general impact on the mood, and the New Zealand rate decision at 9 GMT. Tomorrow, jobless claims as usual, import prices, and retail sales in New Zealand. Again, a big week for New Zealand. And Friday is the real important week. Yeah, really important day of the week, sorry. Starting early with Chinese industrial output, then a big event, German GDP. We haven't heard from Germany yet. We have heard from the Eurozone. So this will be the big event, more important than the Eurozone figure at 6 GMT. And then a focus on the US consumer with top-tier figures. Retail sales for July and consumer confidence for August should really rock the boat for the US dollar. We would need huge gains in both to make markets think of a September rate hike. I don't see that as very probable. And let's see if these figures keep up. Remember, the US economy is all about consumption, or mostly about consumption. So this makes a very big difference. Okay, before we head off, more questions here. Ed says, well, you make profits, but they get eroded by devaluation. That's why I'm asking to get maximum potential out of the currency, like purchasing power. I don't have a good answer for that. When I was an Alpari customer, they came out with an FX trading account based on gold, but I never bid on that they went bust, or they moved funds to another account. Yeah, gold is perhaps a bit more volatile to have you as a base account. I would say stick to the US dollar or the euro or the pound. Perhaps it would be best to use the currency that you are personally using. it will just be easier to manage. Okay, just for comfort reasons. Okay. Anyway, that's our show for today. Thank you very much, everybody, for coming, for the great questions. As usual, you'll be able to watch the full show and the special segments on FX Trade and later also on Forex Crunch. And thanks again, and see you next week. Thank you, and bye-bye.